Welcome everyone, thanks for coming back to another episode of our weekly podcast with the Mining Store. We've obviously got Tony as well as Dix coming in for the research, as well as Theo and myself, Taylor. We're sort of going through a few things obviously that's happened over the last sort of few days. At the end we've got a few questions actually that's come in from some of our members, which is really cool to see people engaging with us. So stick around for the end. We're going to go through that and sort of answer a few of the questions as well. So keep shooting those in as well.
Yeah, thanks. It was good to see a number of people reach out to Taylor and Theo with some questions. So we'll do our best to answer those. And if anyone else has more questions as well, feel free to reach out to any of the boys here in the office. First up, I think Mitch or AC Diggs is going to run through a bit about the markets, and we'll jump straight into it.
Yeah, so we've just seen a couple of interesting days for the stock markets coming off the weekend. We were pretty green going into the weekend. I believe we were at 24,500 at one stage.
24,300, I think.
I think we went past that 24,300 resistance and kind of topped out at 24,500, 24,600. This is for Bitcoin. Sorry,
didn't last long.
So yeah, which probably it didn't last long, but it probably correlates pretty well with the stock markets being pretty green. Even across yesterday, Monday for us Australians, but then, kind of today they've started to see a bit of a pullback, which can probably be pertained to the US-China tension with Taiwan. We've seen infamous Nancy, the greatest stock trader in the history of
I think
history of the globe.
She's actually in profit on our latest Apple trades.
What?
I think she's going to Taiwan to see these computer chips being built for a recent investment in Nvidia, was it, or something like that. So anyways, so we saw the Asian share index shed over 1% with some steep falls in Hong Kong, China and Taiwan. The US and European futures were also red. It's going to be a pretty interesting watch, I think, over these couple of days to see the tensions between the US and China. And
when is she scheduled to go over?
I think she was scheduled to go today, tomorrow.
She's landing there today, or now, anytime now.
So I read a couple interesting articles.
Great.
The Chinese government saying we're watching our movements pretty closely, and those that play with fire shall be perished.
It's been taken as an act of aggression.
They're acting very aggressively. So it'll be a really interesting watch to see A, if she does, B, the response of the Chinese government, military and whatever else, and then the wider impact on the stock markets and what unravels from here. But definitely an interesting watch.
On the China side of things, over the past kind of 6 months, China has been unloading their US Treasury holdings, so they're actually trying to de-dollarize. There's a lot happening behind the scenes with Russia, India, China. A lot of the kind of emerging markets, they're kind of trying to team up to.
Weren't they trying to create their own reserve currency?
I think it's the BRICS nations. So there's that kind of scenario in play where a number of economies are trying to move away from the US dollar. But if we cast our minds back to even when Trump was in presidency and the trade war really kicked off, and all these sanctions were imposed on China back in January 2018. The US dollar did go through the roof, but that was also in line with some downside in the crypto market as well. So it really depends on how negative this news gets. It could have quite a negative impact on the crypto market and the financial market as a whole. So, hopefully it's just a bit of smoke screen in the news and nothing too serious there.
Yeah. So kind of off the back of this, we saw the Dow Jones futures drop about 130 points. The industrial average fell 0.1%. The S&P actually moved down 0.3%, and the Nasdaq fell 0.2%. So that kind of ended the 3-day winning streak and the euphoric kind of areas we were in probably 48 hours ago, when a lot of people were probably pretty bullish on both stocks and crypto. But once again, it probably for the 100th consecutive weekend in a row was a pretty decent fake out on most markets, and we couldn't really push past those key points of resistance to really push us up to levels that most people are probably crying out for. So
it's mad. The rally was driven by negative GDP in the US. We're in a situation where negative news events or economic data is pushing markets higher. It's the worse that the economic data gets, the stronger the possibility of a Fed pivot in September.
It's really
strange.
It's really interesting point. So that you mentioned, we had the negative GDP growth, we had the Fed, interest rate
yeah.
hikes, and then we obviously had big tech earnings, but all the markets responded pretty closely. So it probably insinuates that Wall Street's probably inclined to believe we're at a turning point. Like things are, like you said, become really priced in. Even the really negative events, people aren't. The market's not as volatile as what it once was. We saw with the previous, hike rates and whatever when they were first coming out of rate hikes. Sorry, that things are responding pretty negatively. So it's really nice to see, like you said, that these negative fundamental events are happening. But the markets aren't responding immaturely or anything, and they're responding quite positively. So
it's probably because it was majority, priced into the market. That recession, that negative GDP was priced in, and what happens is the retail client would be like, shit, we're in a recession, sell my stocks, and the market rallies. So they get caught selling at the bottom or shorting at the bottom, and the market actually rallies. It could be a short squeeze. Who knows if it's a market bottom? But I guess it's going to be interesting how the China-US tensions unfold. That could be the next driving data point in the market.
Well, that's the thing. That's probably the only main thing until the next Fed pivot, which is what? Or hypothetical pivot in... Is that
September now? Yeah.
It's kind of the only thing that's going to drive it for a bit, won't it?
Yeah, exactly. It's going to be more news events. There'll obviously be like inflationary data, other smaller data points coming out, but the next major news event from the US will be obviously the 7th September Fed pivot. Other than that, you're going to have these headline events, these risk events that are quite unpredictable. No one knows what's going to happen. With Nancy heading over to Taiwan, so it's going to be interesting couple of months, definitely.
Yeah. Moving on, I'm just going to briefly mention that there's another merge announcement for Ethereum 2.0. So they've got the Goerli Prater merge announcement. I'm not sure if I pronounced that correctly, but they're essentially getting to the meaty end of this very prolonged merge.
3 year kick the bucket down the road.
Yeah, that was supposed to happen a few years ago, but
wasn't it 2019, wasn't it?
Yeah, it was 2019. So there's only one more testnet that remains, Goerli, and then it's associated Beacon Chain Prater. So that'll be happening soon. We'll put a link for you guys to read more on that announcement. But things are looking quite bullish for Ethereum. We've seen that happen in its price action. It's almost doubled since its swing low of this recent consolidation range. So things are looking quite bullish for Ethereum. Hopefully things hold up towards September, and if things by then and they start to pivot in September and it falls in pretty nicely with the or at least towards the end of the year when the mergers happen, you could see a pretty handsome return on Ethereum if you've DCA'd or you've bought at these lower prices. So
on these big events that take place in the market, there's a lot of hype around them. So you generally get a major rally into the announcement and then a big dump afterwards to wipe out all the weak hands. That kind of buy the rumor, sell the fact scenario. So whilst there's a lot of hype going into the announcement, yes, it could be bullish, but also be careful coming out of the announcement. There could be a big sell-off as well, depending on how it actually unfolds.
I'll just quickly mention a few brief fundamental points before Theo talks on the halving. We've seen a lot of new movements with El Salvador. They've had $6 billion investment injection offer. They've still got plans to go ahead with their Bitcoin bonds. FTX just got approved to operate in Dubai. We've seen peer-to-peer trade in Nigeria increased by over 250%. Africa are pretty keen on Bitcoin and making it a reserve currency, which seems pretty good for kind of a continent that would have most of their fiat pretty stuffed and hyperinflated. So there's another few things there that most of our members would have seen in our market analyses yesterday that you can read on. But
Okay, so the first speculation I'll make is I reckon Tesla will buy another massive position before the end of the year.
In Bitcoin?
Standing statement over here.
Bitcoin.
You heard it here first. I've been following Elon's tweets and I think he's starting to change his
Put up the other day that was the same as Satoshi.
Oh no!
He put up like word for word the exact same thing, like trying to mimic it from like 2012 or whatever it is.
I think that could have.
Well, there you go.
I think that could have been a meme.
You heard it here first. Speaking about the halving, I think it's a good point to be actually thinking about, especially if you're mining. We've got here, based on the current hash rate, the date is set for the 1st of August 2024. So we're literally 2 years exactly away from the next halving event on Bitcoin. And this presents an enormous amount of opportunity, because if I said to you, if you got involved the last bull run in 2017 and you had an opportunity to enter Bitcoin in 2015 before that run up to 20K, look, would you have done it? So I think really the question begs, do we start to see, there's been 3 halving events in total. I think I know off by heart, the last proof in 2016, the price of Bitcoin before the previous halving was about $500 to $600 per Bitcoin, and then it rallied up to 20K. Then it's obviously went back down to 3,500 to the most recent halving event in May 2020. Price of Bitcoin was about 8,000 to 9,000 US dollars before obviously we've had the next run up to 69,000. Now we're at in a very not very similar scenario where it's come down to its previous high, and even just below that is the bottom in, and are we 2 years away from the next 150k Bitcoin, 100,000 Bitcoin, or 200,000? And I know many clients out there are still feeling a little bit of the pinch, considering obviously the price of Bitcoin and the profitability, but really, is that going to matter if you hold your Bitcoin and it's over $100,000?
On that as well, with the halving event, people think they need to buy on the halving event, but looking at previous halvings, the market has bottomed a year plus prior to the halving event as well. So we're coming into a period where the bottom could be approaching. You don't want to wait for the halving event and then buy. Yes, that's when the parabolic rally really kind of kicks in, but the market generally bottoms between 500 and 300 days prior to the halving event. So we're coming into that period where the average market bottom tends to fall.
And it makes a good point, right? Like, a lot of people are under the belief that on this next rally, it's the next rally, the next bull run, and it's not quite the case. Like, we could see with a pivot towards the end of this year that we go from, say we had bottomed out at 17k, 15k, 20k, bottomed out now. There is every chance that we see a rally, at the end of this year to maybe 48k, 52k, and then the pullback and the true bear market, bottoms out 300 days next year out from the halving, and that's the true bottom.
But the thing is, on that, like, would you? I think trying to time the bottom is very difficult. Would it really matter if you bought it at 14 grand, 16 or 17 or 20 grand? No. If it all got to 100,000 anyway, you know what I mean?
Definitely.
And I think that's what I've been speaking to clients with, because especially with people that have bought equipment at the start of the year, I know many clients are feeling the pinch because obviously the unit prices, even for us back then, were expensive. But I think the real prospect comes with that 2 years away from the next halving, and in actual fact, I know some of my clients are actually preparing for the halving after that as well, and infrastructure. Because 6 years plan or a 10-year plan, even on BTC, the most important thing in my opinion when it comes to mining, and I always say this to all clients, is time horizon. If you're looking at a short-term time horizon, mining's not for you, bottom line, because you're going to feel all those little short-term jitters and all that sort of stuff. But if you've got a long-term time horizon and you can see the halving, and to give you my personal experience in 2019, Fez knows this, I had a node and I sold it just before this run up. I didn't even know the halving was there. After a while working at Mining Store, I've learned all this stuff. It makes sense to me, but I'll never make those same mistakes. So I think it presents that opportunity again to really, like, I know a lot of people can't see through the distortion of the bear market, but really there's a lot of opportunity there, whether it comes to mining or the trading academy or getting involved and not trying to actually time the bottom, but we're near the bottom, wherever it is. You know what I mean?
Yeah, definitely. In the grand scheme of things, what does another 10, 15, 20% really matter? I guess that comes down to the dollar cost averaging strategy as well that the boys do in the trading academy. But I really think that we're coming into the area. If you look at Bitcoin on a log scale, in the halving channel as well, we can see that we are approaching that bottom area. If that breaks, then who knows where the bottom is going to be. But this is generally where the smart investors are buying Bitcoin and starting to accumulate. Send it away into a cold storage.
Just to touch on Theo's point about, buying, like, doesn't matter buying now if the bottom's now at 17k, or next year if there's another bottom of 17k, and it came back to what we dived into last week about upside versus downside, like talking about even if, like you said, that we break out the logarithmic chart and there's a new bottom. Well, okay, if that's 13k, that's fine. That's probably close to 40% from here, but your upside by the next halving should be at least at a minimum of 3 to 4x, 300 to 400% versus maybe losing 40%.
Yeah, exactly.
It's just downside versus upside, and that's why, as Tony mentioned, a lot of smart investors are accumulating right now because it's just a game of upside versus downside.
On this,
and playing the odds.
on this possible bottom, there's a couple of interesting things that I read the other day. It's the first bear market bottom without VIX, the volatility index trading at 45 plus. It's the fastest bear market bottom with the Fed raising rates. It's 4 months shorter than the average bear market, and it's 12% higher than the average bear market bottom. So this potential bear market is, falling just shy of what a typical bear market does do. So,
I think I've looked at that historically, and each kind of bear market you look at is always a bit shorter, always a bit more volatile, isn't it? Yeah.
Well, no, not necessarily. So, it's never going to be exactly the same. But you go on averages to kind of predict where it may be, but all the conditions are always different. Like the conditions right now are not the same as the last recession.
Exactly.
So, every market is, and there's also extreme Fed stimulus and money printing,
Black Swan events.
Black Swan events happening as well.
We can talk about the bear market. 2015 Mt. Gox, that had a massive impact on the market.
Now
this time, now it's Terra. Yeah. So it's Celsius. It's Three Arrows Capital. It's in 2015 Tesla weren't selling $1 billion worth of Bitcoin or whatever it was. The market's very different, and like we touch on that a lot with a lot of the historical indicators we've shown you guys. Is we always say, take these with a grain of salt. The one that a lot of people like to use, the pi cycle bottom indicator. The last 3 times that's hit has been in very easing, kind of macroeconomic context where, there was very low interest rates or no interest rates. The economy was booming, and, people are trying to say that, this is the bottom, but for all China and the US go to war tomorrow, there's a Ukraine-Russian war, and they've still got hikes to come. And you're left thinking, well, why hasn't the pi cycle bottom indicator worked this time around?
I think that...
And, that's not to say it won't work. Bitcoin works in funny ways. History does repeat itself with Bitcoin a fair bit.
I think Will had a good point that he made, and I think he just posted something with the S&P 500 performance in a month. I think it's like 13% net gain over the last 30 days, and then Bitcoin's like 35%.
A good point about Bitcoin this month is whilst it has seemed that we've just kind of been in this consolidation range, which we have been, it's just posted the month of June. I think it was 35%. I think it was actually 38% or something like
36
that. And exactly. That is actually the biggest monthly gain in Bitcoin since October of 2021. At the absolute peak of Bitcoin. So we've actually had the best month of Bitcoin in 8 to 9 months. So that's not to be forgotten about how well in the context of these hikes, these wars, this whatever you want to bring up, is that it's actually posted a 38% gain in a month.
And also just on miners as well, there's a new catalog that's come out with all of our options. So the real big thing I've noticed that we have right now, post even 6 months ago, is the amount of different types of miners you can get. And even we've got the dual miners now that we can host out of the US, or we can send them to Australia for people. They're a dual miner that mines both Litecoin and Doge. Even I'm considering getting some, just purely, again, I don't have any Doge because it's got no utility at all. I know it's a meme coin, but it's 92% down. So the likelihood of it, coming down even further than 92% there's a percentage there, but there's a lot more upside potential. I think at one point it was like 70 billion market cap at the peak of the market. It was and I was thinking, I wish I picked up a little bit or something like that. And then now it's like 0.02 cents or something like that. So really, there's different opportunities for clients that are considering miners. I know many people have phoned in wanting to get exposure to altcoin mining, maybe not necessarily Bitcoin, and we have that option for you now. And even for brand new miners that maybe don't have the budget, we've got some secondhand miners under that 5k level as well now. And then finally, we've obviously also brand new, we can actually send XPs, the 140 terahashes to Australian clients that want them. I know many people have called in wanting those machines. We have direct access. We don't have, again, with the ones in the US that we're hosting, the 198 terahash, we still can't actually get our hands on them to a direct line to Australia, only the 140 terahash. And then finally we have a few handful of on-site S19 brand new, ready to be switched on at our EU facility as well.
I think it's quite important to, just touching on that fear, it's quite important to understand that like Mining Store and the team here have gone above and beyond to try and find different avenues and ways to increase revenue for the Mining Store clients over the past couple of months to make sure we're ahead of the curve going into the halving event, whether it's diversifying away from Bitcoin through the Dogecoin miners, increasing your hash rate. There's a few other different protocols we're looking at as well. Top of the range miners at 198 terahash. So been pretty active and productive during this bear market to make sure we're set up pretty well going into the next halving event as well. So,
and even Trading Academy, I know one of my clients, Ryan, he listened to the last, had spoken to him this morning. He asked about Trading Academy as well. So obviously Taylor's more specialised in that, but we have an academy where we can teach people how to trade it. It's more or less a good way to get signals from people that know what they're doing. We post all our trades with stop losses and take profits, correct risk management. So if there are people that also want to get maybe not exposure to miners, but they want to get involved and get some exposure via actually buying the asset on different things. I think our latest post was to do with Atom, which is a great project, and then there's all of those different levels that we're looking at DCAing and reasons why we're part of that actual project and all those little bits and pieces.
Yeah, I just want to add to that. Like the Trading Academy's got two sides to it. A lot of people might use it just for the tips because they just want to simply put money into the market and write it out and whatnot. And then, like Theo said, there's also the educational aspect of it. You get to see how we chart things more often than not. We explain it from an educational standpoint and what the actual chart means itself, and then we give both bearish and bullish perspectives to allow you guys or those people that are in the market to have a better understanding of where we think the market's heading. And of course, this market requires your attention. It runs 24/7. So if you've got the information, both technical and fundamental, at your hand most days, then you don't have to be putting 2 to 3 hours, 4 hours research per day into it. You've got it at a click of your fingers, type of deal. And that's really where the main value of it comes. So
it's good to just having that information just gives you confidence in entering that position, because at some point it may be in the red, and I know a lot of people aren't used to seeing that, but a lot of the time your trade may be in the red before it turns green, and I think having the information at a fundamental and technical level is definitely going to assist you through that as well.
Just on that, we'll move on to the technical analysis side of things. I'm just going to run through a few charts on BTC and ETH as well as the DXY. Alrighty, so on the DXY, we've actually spoken about on the podcast a few times, I believe, and for those Trading Academy members, you've been flooded with it over the last 6 months.
You know it off by heart.
Explaining the inverse relationship with Bitcoin. You all know how parabolic the DXY has kind of been going over the last 12 months, roughly. I just wanted to show you guys this chart. It's actually got a parabolic curve pattern. So this is pretty much one of the strongest uptrend patterns a chart can have. Pretty much means it goes up the farthest and the fastest and is under the strongest accumulation, with most pullbacks is bought by eager trader investors. You can kind of see every pullback's kind of bought here. You can pretty much see from this chart here that it's been broken. And so what I want to kind of show is kind of the educational standpoint for those that don't understand the trading pattern. This is kind of how it happens, and you can see how similar the structure actually is to the DXY chart itself. We have multiple touch points, so you can kind of see touch points like this. And if I show you on the DXY, you see these kind of multiple touch points here. Hopefully this kind of continues to play out, and we see a true reversal on the DXY over coming weeks and months, which could probably, if it falls in line with other things, be a kind of a true signal for Bitcoin, because we've showed that inverse relationship chart, haven't we, with how the bottoms of the DXY coincide with the Bitcoin tops and that inverse there. So
just on this parabolic rally, this is generally how Bitcoin ends a bullish or a bull market, I guess. But the reason why some people got caught out on this bull market top was this parabolic rally didn't actually occur. It was it was a double top scenario. There wasn't that parabolic blow off top rally where everyone in the media is just buying Bitcoin. That kind of didn't play out this time, so that's why there was a bit of confusion as to whether it was a top on Bitcoin or it wasn't. But yeah, we're seeing that now kind of play out on the DXY, so hopefully that continues down, which should give crypto some support.
Yep. Oh, and I also just kind of want to show just a secondary standpoint, because if we actually look at other indicators, we can see kind of lower highs forming out on the weekly RSI, as well as a potential bearish cross on MACD. So these can be other contributing factors to help, well, not help it, but fuel it to continue to reverse further. So we'll be, as always, be keeping a close eye on the DXY and keeping you guys updated with regards to information surrounding that. So we'll move on to Bitcoin. Firstly, I'm just going to kind of take it from 1 hour to 4 hour to a daily to a weekly to show you guys different things. This is that same high, low chart I've been showing you guys. It's slightly different to the last time I showed you. If you remember last time, I mapped out this high low when we were kind of just trading here, and we actually pretty much reversed perfectly to it, but I thought the next high might come in the form of a bit higher. So we had it kind of mapped out to here. We actually printed a high just ever so slightly above the prior high, and kind of believe that we can kind of, if this pattern keeps playing out, we could see kind of a reversal to lows around here on that same trend line before heading higher. That's if it plays out, but it can play out in a variety of ways. This is just one example, of course, with very loose predictions and on where it can go, but yeah, just keeping you guys updated on that one. That one's still playing out, so yeah.
It's as if you knew where Pelosi was going to be.
Exactly right, Taylor. Exactly right. For those Trading Academy members, you guys would have seen majority of these charts and the market analyses yesterday. I do want to make mention that they have kind of played out. I sent this double top formation yesterday out to our members. For those kind of new listeners that don't know what a double top is, it's a pretty harsh reversal pattern that occurs. So if I show you on this chart here, where you can see that I've kind of mapped out that we've got this first level of resistance and then kind of that same trend line, but the neckline is here. It appears like this now, but we're currently trading around here. So it's kind of come to that first level of resistance and then kind of breaking down. What are we at now? Yeah, 22,800. So it would sit around probably just about here. Because it's not a live updated chart, this image, because it was from yesterday's market update. But yeah, we can kind of see the volume exhausting demand wise. If you look at these arrows here, you can kind of see, demand is lowering. It's exhausting, and this kind of lines up with the bearish cross on MACD, and then also the overbought territory on RSI, and we're kind of forming out a kind of a bearish structure here. So we could see this play out. Obviously, it's invalidated if we kind of bounce from here. But just another kind of short-term chart for you guys to take note of short-term direction. But
I just want to, with these charts that Mitch is going through, it's especially important for guys that are, day trading, looking at short-term movements in the market. If you're a long-term investor, then these kind of 1K, 2K, even $500 moves in Bitcoin, not as important to you guys if you're looking to accumulate over the longer term. But if you're looking for short-term plays, then definitely this is some very valuable information.
Yeah, and just adding on to that, like it literally using the same pattern I mentioned on a 1 hour chart that gives you a better indication of where we could head in the short term. Using that same pattern that I've showed you guys last week, you can, the opposite of that pattern in lower lows and lower highs. You can kind of in the longer term map out potentially what could happen. I'm of the opinion that if this pattern is playing out, truly that, we could form this lower high here, whether that happens from the bounce to 28K and that forms the lower high on the longer term chart, or, even where it is now, it's still a lower high, and then potentially that's where we revisit that last lower low, and that could potentially be our official bottom. Once again, this is just a trading pattern. It's not 100% going to play out. But yeah, we could see this happen, and then maybe that's our bottom towards kind of September, October, and then we see the pivot happen in October, November, same kind of time, and then that's where we start to see that rally that we've been talking about towards the end of the year, start of 2023, that could potentially happen.
Well,
so
that kind of aligns with the bottom of the market leading into a halving event. That kind of date, that time horizon. A possible Fed pivot towards the end of the year as well. US in a recession, distrust in the government, distrust in the central banks, more money flowing into cryptos, decentralized assets, like that kind of time horizon does tick the box for possibly towards the end of Q4.
So a bag of Bitcoin for Christmas he's on track then. Great, fantastic.
What I want for Christmas.
Exactly. Ask your mum and dads, yes. So we'll move on to even lower time frame. Apologies. Just talking about the 200 way moving average that we've spoken about, across the last couple of weeks. The bullish thing is, we closed 5 candles below. I've mentioned to you guys for 8 to 9 years this acted as support on a weekly. We actually closed our first candle above it, which is really good. We are kind of currently trading back now near it, but we did close a candle above it. Which is good. So it has flipped on the weekly to support, but now it's about, not just one candle, 2, 3,
momentum,
4, if we want to bottom out here and, hopefully use that as acting support. But that's just another bullish long-term signal that's been good. And then I also want to show you on the same weekly chart, just MACD. So just historically, you can see here, I've circled where the bullish crosses have happened on the weekly MACD on Bitcoin, and you can pretty much see, here we saw Bitcoin go from 5k to close to 60. Next bullish cross happened. We saw it go from 30 back to 70, and then we saw a minor rally here where it flipped bullish, and then we've actually just approaching a potential another bullish cross on the weekly MACD as well. So that'll be a big watch over the next couple of weeks if we start on the histogram printing a few green candles, because you look historically, every single other time this cross has happened, at least from 2020 onwards, we've seen at least either a relief rally, a decent relief rally, or a real run. So
that aligns perfectly with the bearish divergence on the dollar index as well on the weekly time frame. So it's no coincidence that we could be coming into a dollar top and also a Bitcoin bottom at the same time. So just a risk on, risk off play, really.
Yeah, great. So I kind of just mentioned here, you see an increase of 400%, one of the last times this happened. I just do want to make mention because, a lot of this, maybe the short-term signals seem quite bearish, but I just want to remind everyone that always, regardless if we are showing bearish indicators and going, they just think it's going to 0 or to 10k to 15k, that we are always bullish in the long term.
Yeah.
So I might show you guys charts on a 1 hour, a 4 hour, or even a 12 hour that might present, bearish perspectives in the short to medium term. But, in the long run, these are indicators to give us where we think things are going to turn and where we believe, things are going to prosper in the long term. So, and it's exactly why we have our DCA orders in place, not only on alts, but on Ethereum and ETH, because, we're preparing ourselves for lower, but to plan for it going higher. So, just moving on to Ethereum now, we'll quickly touch on that. Pretty much last week, I think, on the Monday, I got up an Ethereum chart on a 4 hour, and this chart looked different last week, but I circled you guys the RSI where it entered oversold territory, and I circled here, and we were actually trading here, and I queried whether this pattern looks like we've reached a local bottom, and pretty much from last Monday I showed you guys it here, and it pretty much reversed, and it was the local bottom. So we saw it reach kind of oversold territory straight away again, and it's kind of started to consolidate and come down. So it looks good.
Just a handy 75%. Mitch, just a handy 75%.
Yeah. It's good to see these things playing out, and that we're getting the right. And, like Tony said, for those that do follow the shorter term charts, hopefully one of our listeners, let us know if you longed, Ethereum down here at 1350 up to almost 1800. You're probably
1100
rolling in the cash. Yeah. Well, there you go. I just make mention about how that played out perfectly, and then just another chart I want to show is it looks like we're kind of in this ascending wedge on Ethereum on a 1 hour chart, so a higher time frame. Just a reminder that a rising wedge is a technical indicator that suggests a reversal, and the price moves up this kind of apex towards here, and then we'll kind of reverse down. So I just want to make comment that that it's also accompanied by a decline in volume. It's kind of what I showed before. You can see from this kind of apex here that the volume is declining heavily. It's playing out in the above chart. I drew this yesterday for our members, thinking that because we've got this bearish divergence here, we could see 1581 rather than continuing up the rising wedge. And I printed this chart when we were trading at 1700, and what would you know, we're trading on Ethereum now at 1580. Literally at that line right there. So there you go. That played out how expected as well. I did give reason to think that we could continue kind of up the rising wedge before it played out, but we'll have to keep you guys updated on this, and it's one we can continue to update. So, and then I kind of just want the last thing, just because these are quite bearish. This is quite a bearish perspective once again in the short term, but I want to reiterate, in the long term, that we're always bullish on Ethereum, and the MACD, that signal that I showed you on Bitcoin, is pretty much the exact same on Ethereum. So the last time there was a bullish cross on the weekly MACD, we saw Ethereum go from as low as $300 to $4,000, 1.5 to 4.5. That's that relief rally this year, and we've kind of just made a bullish cross here. So let's hopefully that plays out. If we see a few, like here, the sky's the limit towards the end of the year and whatnot. So that's it for technical updates on the DXY, Bitcoin and Ethereum. I think just to finish off, Taylor, you had a couple of clients and a few of our very keen supporters and listeners ask you a few questions that they wanted us to answer.
Yeah, definitely. Got a few people that have touched base, just looking to sort of, test a few theories, I guess is probably the best way to put it. So we're going to start off from Adam. Thanks, Adam. When getting into mining, what's the most important part of the planning? Is it the funds? Is it the strategy?
I would say with mining, it's depending on how many miners you're looking to purchase and to scale, you need to get yourself set up correctly from the start. So that's going and seeing an accountant, making sure you're set up correctly in the right structure, whether it's through an ABN, through a trust, through your self-managed super, just because there are so many different benefits depending on the structure you want to go for. So, you can buy your initial miners. Whilst they're in transit, you can go and speak to one of our crypto tax specialists. We can send the referral through as well. They can then make sure that you're set up as tax efficiently as possible. Otherwise, you could be throwing some, realized gains down the toilet, 2, 3, 4, 5 years from now. So making sure you're set up correctly in terms of the structure is definitely the best strategy.
Yeah, I think the best word that you said there was efficiently. Making sure that you've got everything, your I's dotted, your T's crossed, making sure that you've got everything set for the next, few years to capitalise on everything.
We can't go into tax in too much detail, but if you're mining as a hobby, power isn't tax deductible. But if you're mining through a company, through an ABN, it is. So there's a clear advantage there, depending on however many miners you're looking to proceed with.
Yeah. Exactly. All right, this is probably one for you, Mitch. When you've got multiple positions in the red, are you better to DCA into them or accept losses and reposition into new projects?
Well, that will entirely depend on your reasoning for entering the project. You given that you entered it based off your fundamental belief it had true utility and whatnot, then I would suggest DCAing, because it's a game of emotions, isn't it? Do you think to sell out of Bitcoin when it's 70% down? Do you think the fundamentals are gone?
Exactly, yeah.
The fundamentals are never gone, and it should be the same for other projects. Obviously, there are black swan events and whatnot that happen with projects. I personally believe, if you're at this stage of the market, contextually, this question depends on where you are in the market, of course. But you would be better off DCAing into these projects rather than realising losses. And because you're selling at the worst point in time, aren't you?
Exactly. Yeah, literally.
You're realising losses at what is the bottom, or nearing the bottom is the general consensus. These projects that someone might be in that you might see down 50% could be up 300% in a year. That's not to say that you just hold on to projects indefinitely and hope for the best. You've got to make a calculated decision on that. But my general belief is particularly with major alts that you already fundamentally believe in have a place in our ecosystem, it's far better to DCA into them rather than, selling out at a really huge loss and then trying to get into another moon bag or another moon shot and try to make it back that way.
Yeah, exactly. Yeah.
And also, it depends solely on which token you're buying. Yeah, if it's inside the top 10, top 20, then it could be worthwhile DCAing into. But obviously with a strategy as well, not just going and chucking a massive bag at that particular coin. You need to have a strategy in place of where you're going to buy in. But if you're outside of that top 20 or top 10, top 20 token, then you probably want to wait for a bit more upside to confirm a new bullish trend in the market before you start chucking more money into that coin.
Yeah. All right, there you go, Paul. All right, so this is a good one from miners as well. So my miner is currently breaking even each month with power. What strategy do you recommend? I can't afford to pay the power bills out of my pocket, so I'm currently using the Bitcoin to pay the power outright. Thanks, Andrew, by the way.
Yeah, so that's a tough one. Obviously, some of the miners, depending on which ones if you've got a slightly older gen, 72, 75 terahash model, then you're probably around that kind of break-even area.
Exactly. Yeah.
There's different protocols that I know. There's been a lot of trouble with different exchanges going bust, and it's quite risky holding your Bitcoin in different exchanges. But there could be some plays to stake your Bitcoin, stake your holdings to increase your ROI through staking protocols. Obviously, you need to do your own research on the exchanges to make sure they're safe and secure. We could be looking at submerged mining. It's a tough one because if you put your miner on pause and you stop your miner from running, then you're potentially going to miss out on a bottom in the market and running higher.
Yeah.
But I do fully understand during a bear market mining it can be really tough. I was there at the same time last bear market mining through a bear market, running my miner at a loss, but it did end up paying out going into the next bull market.
Yeah, exactly.
But it's a tough one. These bear markets don't last that long. Bull markets tend to last longer as well. So sometimes you have to just keep. If your miner's around that 72 terahash, just keep breaking even each month and hang in there until the next bull market starts. Hopefully the hash rate comes down with the price of Bitcoin. It has tapered off a fraction, so keep an eye on the hash rate as well. If the hash rate starts to go higher and the price of Bitcoin comes down, then you may need to make a decision to pause your miner. But that's a case-by-case basis, really.
Yeah, if people are in that similar position as Andrew, don't hesitate to reach out because there's a few different options, obviously, to sort of, go through and consider. One that I actually came up with a customer the other day was about, potentially trying to subsidise themselves a little bit. So instead of paying the entire power bill outright out of their pocket, maybe subsidise 25% of it. Cover a little bit of it with your Bitcoin so that you're not losing all of it. But it's still an amount that you can be comfortable sort of paying out of pocket every month just to make sure that you're not mining for nothing.
Yeah.
Whether it's 25, 50%, a piece of the pie is better than none.
And that also comes back to the first question, Taylor, about how you're structured. Are you structured mining as a hobby where the power's not deductible? Are you structured through a company where there's some tax benefits there as well? So although you might be running at break even, there could be some tax benefits even at these lows. So that's why you really need to speak to a crypto tax specialist as well.
Can I just add there, for those members of Mining Store or outside of Mining Store, we have a really good partnership with Crypto Tax Australia. There's a link on our website. So if you need to book in a tax consultation to discuss anything mining, capital gains on your trades or whatnot, you can get in touch through us with Crypto Tax Australia and they'll set you up with an appointment and you can figure all that out with a professional that can legally give you the advice because we legally can't. So
yeah, not financial advice. But thanks for everyone that sent that through. If you do have any other questions, just send it to any one of us and we'll get to it.
Yeah, I think the questions are really good, guys. They're a good part we can add in. So if anyone has any questions on, stock market related stuff, mining questions, hardware questions, trading questions, keep them coming. We can do our best to answer. And just to add to that, anything related to the Trading Academy right now as well, feel free to get in touch with Taylor or myself.
Major things coming out.
Yeah. We've got a lot of DCAs coming out for those members. right now. We had
Literally
three come out today. I think we had 2 or 3 come out yesterday, and we'll probably have another 2 or 3 come out tomorrow. And then there's also the excitement of new projects, not just DCAs, because DCAs obviously relate to projects already in and have been prior. So we'll be looking to get some new buys out on investments that we're yet to touch, which is exciting as well. So yeah, thank you very much, everyone, and we'll listen in next week. Well, you'll listen in next week. We'll speak to you next week.
Cheers, guys.
Thanks, guys.